Welcome to Cinnamon Life presents Dr. Mark Mobius with John Keel's Properties. For everyone who's gathered here today for a morning of opportunity, Dr. Mark Mobius is seen by many as the founder of the emerging markets asset class.
He's known as the emerging markets guru, like all you know, and it is said that markets move when he moves. So I do hope the markets move in our favor this time. Mark, you could not have come at a better time. We have a new administration in place, we have a stimulus package on the table, and perhaps we are at the cusp of some significant change, and we hope that it's all for the better. So it's a wonderful time to be here.
Well, I'm very excited by the changes and improvements that the government plans to make, and I believe you're going to see a big inflow of money coming in as a result of these changes and improvements. So I'm really excited by the developments. What I want to say is that I'm very excited by the potential growth prospects for the country, and I don't see any reason why this country can't resume growth at 8% or more.
Let's welcome him to the stage with the biggest round of applause, Dr. Mark Mobius.
Nice greeting. I have to really think about being humble. You know, you have to be humble in our business if you want to succeed. And I never forget, a number of years ago, I was in Scotland. And at that time, our fund was not doing too well. And we received, you know, the Scots don't like to lose money. And we received a telephone call from a Scotsman who said, now, about this emerging markets fund, I'd like to talk to Dr. Dubious. So you have to remain humble, particularly in these markets. But let me tell you, I'm so happy to be back in Sri Lanka and Colombo. I love cinnamon, by the way. I like to sprinkle a little cinnamon on my dessert. But also I love cinnamon because I bought one of the apartments in this new development that you just saw. So I'm eagerly waiting for this project to be completed so I can come and live some time here in Colombo. So I hope to be able to see you in the coming years. We have an office in London, and so it's going to be a lot better for me to be here than in Singapore, where I now have an apartment. So anyway, it's going to be great to be coming here again. What I'd like to do is give you a little overview of how we see emerging markets and a little bit about the background and the history. And if you want to use one word that best describes what's happened in emerging markets, the word is change. We started the first emerging markets in 1987 with $100 million and with only 7 markets in which to invest. It's just amazing. 6 or 7 markets we were able to invest at that time. Actually, in order to get access to a Brazilian company, we had to purchase the shares in London because Brazil was closed. So it was Hong Kong, Philippines, Malaysia, Singapore, Mexico, and a little bit in Thailand. That was it. Sri Lanka, of course, was closed. Couldn't come here. All of China was closed. All of Russia, Soviet Union was closed. Most of Latin America was closed for one reason or another. So it was quite remarkable the way things have changed. And if you look at some of the cities we visited at that time, Shanghai 25 years ago looked like this, and today it looks like this. Dubai, by the way, I just came back from Dubai. 25 years ago it looked like this. Today it looks like this. And if any of you have not been to Dubai, I highly recommend it, because you have this tallest building in the world. Is the most inspiring thing. So, I mean, this is the incredible change that's taken place over only 25 years. Kuala Lumpur looked like this in Malaysia, and now it looks like that. And by the way, those two towers, Dr. Mahathir, the Prime Minister, who's now Prime Minister again, he was Prime Minister and he came back. In fact, I told some Malaysians that, you people are so environmentally friendly. He said, what do you mean by that? I said, you're recycling your prime ministers. And Prime Minister Mahathir was so proud of those two towers. And then someone came to him and said, oh, you're no longer the tallest in the world. Dubai is taller. He said, yes, but we've got two. So anyway, you can see the change. And as I said, in 1987, those yellow areas where we could invest, that was it. That was the only places where we could invest. And today, we can invest in all those areas of the world, over 70 markets around the world, and it's quite remarkable. Why emerging markets now? And the key is the fact that more and more investors, particularly the large institutional investors, really want to get exposure again. As you know, the U.S. market has been doing very, very well, but a lot of people are overweight in the U.S. market, and they want to get exposure and diversification into emerging markets. And this survey done by State Street Global Advisors among institutional investors asked the question about whether his institution would benefit from greater exposure to emerging markets equities. And 57% said agree, 27% said strongly agree, and only 15% said disagree. So obviously there's an incredible interest in emerging markets at this time. The other key word is growth, and this is one thing that people often forget. Sometimes these markets have downturns, but the key is growth, because if you look at GDP growth for 2019 forecasted, you'll see that even despite all the downward revisions that we've seen, we're expecting emerging markets to grow by 4.5% versus 1.6% for the developed markets. Developed countries, of course, include US, Japan, and European countries, and Australia, New Zealand. Even with the US growing at a very, very good rate, 2.5%, maybe 3%, these other countries are not doing very well, but emerging markets are doing very well, and particularly China, India growing at 5%, 6%, 7%. So that brings the average up. The other thing that's changed dramatically is the size of these countries in many respects. Emerging markets are becoming more important, and of course you know China, over 1 billion people, India, over 1 billion people, and all those red bars are emerging market countries. So you see, okay, United States, about 300 million people, but then you have Indonesia, Brazil, Pakistan, Nigeria, Bangladesh, well over 100 million, and Russia, of course, and then Japan on the bottom. So in terms of just market size, these countries are really big. So if you look at emerging markets as a percent of the world, you'll see that population, 70+%, foreign exchange and gold reserves, over 60%, land mass, 50%, exports, 40% plus, and GDP in US dollars, 40% plus, and growing at a fast pace. So, the scope of these emerging markets in economic size is very, very important. And by the way, yesterday someone asked me about tourism here in Sri Lanka, and I said, you people should not be doing 2 or 3 million a year. You should be doing 10 million a year plus. And the reason why I said that is because the fact that you have north of you 1 billion people in India, you have friendly relations with China, another 1 billion, so the tourist potential is incredible. These people are beginning to travel more and more. Of course, when we look at emerging markets, we look at value. What are the the value in these emerging markets. And by the way, Sri Lanka now looks really very attractive in valuation terms. But if you look at the average for emerging markets, we're now at 12.2 price-earnings ratio average versus 16.5 for developed countries. And if you look at price-to-book value, it's 1.5 versus 2.3 for developed countries. So emerging markets, on the average, are rather cheap. Although, one thing you got to remember is that with interest rates down to single-digit levels, low single-digit, and in some cases, like with the euro at negative levels, you've got to take the reciprocal to get some idea of what the price-earnings ratio should be. So if interest rates are 1%, you can justify a price-earnings ratio of 100 times, which is why, for us, when we first came into emerging markets, we were buying stocks at 5 times price-earnings ratio. And now, of course, that's a different story. Currencies are cheap, and if you look at the currency index for emerging market currencies, you can see it's come right down against the US dollar. And of course, that's beginning to stabilize. We're beginning to see some of these emerging market currencies stabilizing at a steady level. Now, one of the most important situations that we've encountered with emerging markets is the technology, the internet. It's been remarkable because when you have a situation like you say, a country like Kenya in Africa, they've actually leapfrogged from nothing to the latest technology. So you have a situation where the leading telecoms company, Safaricom, which is part of Vodacom, launches a money transfer service called M-Pesa. And people without bank accounts suddenly have the ability to transfer money all over the country. It's an incredible development. And it couldn't be done without the internet, without this new technology. So this is having a really incredible impact on these countries. And if you look at internet users in emerging markets, China, 805 million web users, are more than that of the EU and US combined. And it represents only 55% of the country. And if you look at all these countries in red, on the bottom are China and India, then you have Brazil, Russia, Indonesia, all these countries in the number of internet users, all of them are well over 30 million plus. So it's quite remarkable. And if you look at India, here north of you, just to give one example, and of course this is happening all over the world, smartphone costs are coming down dramatically as a percent of GDP per capita. So you're seeing, you're able to get a smartphone in India now for $50 at that level. And of course the Chinese manufacturers are in there in force. And then, very interesting, cryptocurrencies. You know, I suppose many of you are aware of the dark web. Well, the dark web is big, and cryptocurrencies are used extensively in the dark web, and of course Bitcoin is the most famous of all. But the interesting thing is that if you look at the use of cryptocurrencies, share of respondents, this is a survey taken, share of respondents who say they use or own cryptocurrencies, emerging markets are right at the top. Turkey at the top, Colombia, Brazil, South Africa, Argentina, Mexico, Indonesia, China, Chile, etc. So this is, again, an indication that the impact of the internet has been quite remarkable. Risk. Of course, the first thing people ask us is, what is the risk in emerging markets? And of course, there's risk in everything we do. You cannot escape risk in any investment. But the important thing is to look at some of the macro factors. And if you look at debt as a percent of GDP, this is a very important indicator when you look at a country. Of course, China is right up there equal to Canada, US, and UK on the right. But you can see Brazil, Russia, India, South Africa are pretty low in terms of private debt as a percent of GDP. If you look at government debt, of course, Brazil is up there, but most of these emerging market countries, the key ones, are lower than the US and UK. So this is one very important indicator, but probably one of the most important is this: foreign reserves. When we go into a country, the first thing we ask is, can we get our money out? And we've had examples like in Nigeria where the central bank said, look, we'd love to give you your money, but we don't have the foreign exchange reserves. So we said, okay, we'll wait. And we finally got the money out. But foreign reserves are very important. And you can see Brazil, Russia, India, China, South Africa, foreign reserves to GDP ratio much, much higher than Canada, the US, and the UK. Performance. If you look at the performance of emerging markets, yes, in the last decade, not as good as the US market, is one example, but if you look over the long term, emerging markets has far outpaced the developed markets by a very wide margin. And one of the things I want to touch in, and by the way, I'd like to recommend our book, Invest for Good, which talks about corporate governance in particular, but ESG, environmental, social, governance standards, are now very, very important to investors around the world. And the question is why responsible investing in the future for emerging markets will be good. And the answer, of course, is that performance really is better with those countries that have good ESG standards. And this chart shows you that since 2009, the MSCI Emerging Markets ESG Leaders Index performed much better than the regular Emerging Markets Index. So we're paying a lot more attention to ESG. And the interesting thing is that more and more money is going into ESG strategies. You're finding here, you can see that institutional investors are putting more and more money into ESG strategies. And by 2016, you had something like 20 plus billion in those strategies and growing. Just to close, I want to take a quick look at the situation here in Sri Lanka and give you some opinion on that. You can see Sri Lanka's GDP growth over 20 years. You had a bad year in 2001, a negative situation. But look at 2010, 2011, 2012, 8% plus growth. Then, of course, there was a decline. I believe that Sri Lanka can re-achieve that high 8% growth going forward if the right policies are followed and if the economy is given the freedom to really move ahead and grow. So, the situation from a historical perspective looks very, very good for Sri Lanka. The Stock Exchange Index, this is the MSCI Emerging Markets Sri Lanka Index. And you can see during the last 10 years, it's sort of been sideways. Of course, there have been fluctuations along the way. But this, I believe, is the base for another big up move in the index if the policies are followed for economic growth. Thank you very much. I appreciate your attention, and I'd be happy to take questions. Thank you.
Good morning, everybody. So I expect most of the questions will actually come from you, and again, an honor, Mark, to have you here with us. So let me just kick off with a couple, and then hopefully we'll get lots more questions through the system. I guess the first question, Mark, which I'm sure most of us in the audience, most of the people in the audience are looking for is, what's your view on Sri Lanka at this juncture in its history? As Roshani said, we've got a new government, lots of new things on the cards, a tax stimulus, it's just been kind of announced. But what do you see, say, the next 5 to 10 years? What do you see as our competitive positioning and the outlook?
Well, as you know, in the last, what has been 4 years, there's been sort of a respite. In other words, there was a halt to growth and to improvement in the economy. Prior to that, the country was on a really a growth path. And now with the change in government, I see a resumption of that previous growth path. So the prognosis is good. It looks quite good going forward. The question now is how fast the new government can move to make those changes and improvements, and that will really kickstart the economy to keep going. I must say that the opportunity at this juncture in the global economy is very, very positive for one very important reason, and that is interest rates. Interest rates are low and going lower.
Yeah.
So we're seeing almost a deflationary environment, which is very, very good for Sri Lanka. The debts that the country has have to be paid off, and the fact that you can have lower rates can mean a restructuring of that debt and hopefully raising new debt to help the country grow.
So, just building on that, in terms of what you see as needing to be done to kind of give Sri Lanka wind in its sails, if you will, what would you see as an investor looking at emerging markets overall? What would make Sri Lanka stand out? What kind of policy reforms, what kind of initiatives would you like to see in Sri Lanka to kind of...
First of all, the key, of course, in any growth environment is investment. You've got to encourage investment. And that doesn't mean just foreign investment, domestic investment. Now, how do you encourage domestic investment? First way is to make it easier. In other words, government procedures, bureaucracy has to be streamlined and digitized. You know, one of the great things now is that the digitization, it's becoming much more easy. It's easier now for governments to collect taxes, to approve licenses, et cetera, and it's becoming easier for the public to access these services. So that's the number one thing. Number two is taxes. You have to make a tax environment which is globally competitive. So you have to look at Singapore, Malaysia, Thailand, even India. You know, India has recently lowered the taxes. And you have to say, look, we want to be better. We want to have even a better tax environment. Now I realize the government is faced with the debts and they faced with expenditures that they have to make. But in that context, they have to think of new ways to raise capital and to reduce government spending. And the way to do that is to start bringing state enterprises to the market. You know, the whole journey that we've been in since 1987 was a journey that best could be described as the transition from communism, socialism, dictatorship to a market economy. And probably the best example of that is China, where they maintained the one-party rule but adopted a market economy. So the degree to which you expose government enterprises to the market is really a big step in the right direction. So what does that mean? It doesn't mean privatization. It doesn't mean giving away the crown jewels of the country. What it means is exposing government companies to the strong light of visibility, exposure.
Yes. Yes.
So in other words, if you list, let's say, the life insurance company owned by the government, immediately the balance sheet, the profit and loss statement becomes public and exposed, and you begin to get improvements. So I think that is one big step in the right direction. See, the key that we've got to remember is there's no shortage of money. There's lots of money around.
Yes. Yes.
Why is it that you can have, how much did Alibaba just raise in the Hong Kong market? 2 billion, 3 billion? Then you have Uber losing $1 billion a year or whatever. So there's no shortage of money. There is a shortage of reform and an ability to attract this money. That's really the challenge.
Okay. So I guess the natural, so there's lots of discussion over I'd say the last decade about bringing in private capital, privatizations, listings. Aside from the insurance company that you talked about, are there any other sectors where you see heavy government involvement, which potentially can bring in private capital, in your experience in the region?
Well, you can go down the list. You can go to banks. You can go to transport. I mean, a lot of people say, oh, the railroads are losing money. Hey, there are a lot of companies that are losing money that are listed.
Losing money, yeah.
Big deal. I mean, you get them listed and you reform them and they begin to make money. Airports would be another. So there's quite a long list of government enterprises that could be brought to the market. By the way, one of the reasons why I mentioned this, bringing these companies to the market, is one of the big challenges that Sri Lanka now has is the stock market, the capital market, both the bond and the stock market, are too small. And one of the big changes that have taken place in our industry, the fund management industry, is the move from active management to passive management. In other words, where in the past we were running funds actively, picking stocks and so forth, and charging fees of maybe 1%, 2%. Now there's been a massive move to passive funds, ETFs, exchange-traded funds, and funds like John Bogle's passive funds, where the fees are extremely low, but there's no manager. Basically, it's done by a machine. You follow the index. Now, what countries are big in these funds? It's the countries that have big market capitalizations. So the weighting of these countries like China goes up dramatically. You have a situation where Saudi Arabia, where I forbid my people to invest, but it's huge in the index because
so you have to
this.
invest.
You have to invest. You have to. These passive funds have to invest. So it's very important for Sri Lanka to be recognized in the index game, so to speak, and that means listing these big state-owned enterprises, which will bring the market capitalization up and will force the ETFs to invest in Sri Lanka.
Okay. Another question coming from the audience. What are the sectors that you see where you foresee lots of growth in Sri Lanka?
I think one of the areas that it's going to be very interesting is in the software area. I believe that there's going to be a big opportunity for software services in the broad sense of the word, which mean call centers, coding, all of this kind of situation can be very, very fast growing. And the reason why I mention that is that with the developments like what you have seen with Cinnamon, it's going to be more of a pleasure for people to live in Sri Lanka.
Yes.
And it will be attractive for intelligent people who are well educated like yourself to stay in Sri Lanka rather than go abroad, and to attract people from abroad to come here to live. And of course, people who are doing software service and that sort of thing want a nice place to live. And that would be an attraction, which would mean fast growth.
Okay. So I think if you look at what's been spoken and studied about Sri Lanka over the last decade, there's a couple of industries that come to the surface as quick wins where we really can get a kind of big advantage. Obviously, tourism is one. What's your view on tourism in Sri Lanka, compared to the region where we are? We've got, 2 point something million people coming in. Where do you see that going and how
You know, the
fast?
potential is incredible. I think someone was telling me that this little island of Bali attracts 10 million a year or whatever.
Something like that, yes.
I mean, it's crazy for Sri Lanka not to be attracting more than that. Because the country has so many attractive features. The people are very friendly, the services are great, the mild climate, sunny climate, no typhoons. Maybe you have a tsunami once in a while, but no big
Every
deal.
century, maybe.
And it's got a history. I mean, there's so many things here that are attractive. So it's a matter of harnessing the industry in a way that you can really move forward and get people to come here. You just won the Miss World contest. That's another attraction. So you've got to get this out into the world, the publicity out, and also have the services here to cater these people. What does that mean? It means a bigger airport.
Right.
Now, I must say, when I landed day before yesterday, I liked the airport. It was very nice. I thought it was a new airport. I didn't realize it was the old airport. Apparently, they reconditioned it, did a very good job. But I do know it's too small for
Overcapacity
what
already.
you can do. Now, that again means bringing in foreign capital. And I think they put out bids for people to manage the airports. And there are any number of experienced organizations around the world that can come in and do that and do very well. So one of the other interesting things is the cruise industry. I'm surprised that there aren't more cruise ships coming into Sri Lanka. That to me is an ideal. The fact that you have this beautiful port
Yes.
means that you can attract this kind of industry.
Okay. Again, I just encourage all of you to push in some questions via the website so I can kind of keep Mark engaged. Shipping. Can we talk a little bit about shipping? And I'd like you to talk about that in the context of the trade war, the geopolitics of it, the Belt and Road, and there's a lot of activity going on in the trading ecosystem around the world. How do you think Sri Lanka can play? How do you think we're positioned? And how do you think we should kind of maneuver to position ourselves to win given these global forces?
Well, as you know, the container port that the Chinese built is now beginning. I was really happy to hear that it's doing very good business. Sri Lanka is in a very unique position, not only because it's positioned between Asia and Europe and the Middle East, but because of its deep water status, which means these large ships can come here and break up some of the cargo and ship it up to India. That's an obvious, very, very important business and can grow dramatically going forward. But at the end of the day, the fact that you have this equidistant situation means that you can become a ship repair and ship building industry as well. That's a very, very, very notable kind of business. That's the reason why I mentioned the cruise industry, because these cruise ships need servicing. They need work being done on a regular basis. And this is what Sri Lanka could become because of its nice location. So I would say that the shipping industry is already growing here and doing quite well. But I think you've got to diversify away from just container and break bulk, but towards cruise shipping.
How do you think though we will fare in this US-China trade war? How do you think that's going to impact?
You know, we've seen a little bit of a slowdown as a result of the trade war, mainly because China is such a huge exporter to the US. Of course, there's going to be a slowdown because, you know, with these tariffs imposed. But the reality is that it's a great opportunity for many emerging markets. And many of these countries are already taking advantage. Vietnam is booming because a lot of the Chinese manufacturing has moved south to Vietnam. Bangladesh is benefiting. In fact, I know of one of the largest producers of baseball caps in China. They moved their production to Bangladesh. So Sri Lanka can benefit from this movement, this restructuring of global trade. Now, of course, I realize that you don't have that much labor. Rates are not as cheap as Bangladesh, but there are many other areas where Sri Lanka can shine in more specific areas like medical instruments, for example, and other areas where skill and smaller workforces are more appropriate.
Let me go to a question from the audience. How do you assess ESG of Sri Lanka, and where do you see improvements are needed?
ESG in Sri Lanka is not that bad because you don't have many mines. Mining is not a big thing except for your gem mining. And you don't have many really big polluting industries. So in some ways you're in pretty good shape. But I think Sri Lanka is no different from other countries in the world. There's a lot to be done in terms of environmental, social, and particularly governance areas where improvements can be made. Nobody's perfect. But I think Sri Lanka is well on the way because people here seem to be very aware of the importance of the environment, of preserving the beauty of the countryside.
Okay, so a related question. What is the trigger for an emerging market fund such as yours to say now is the time to invest in Sri Lanka?
Well, now is the time in terms of valuation. It's good, but the challenge is liquidity. Because you must remember that most of the funds around the world are open-ended. In other words, the investors can ask for their money back at any time, which means the fund managers like ourselves must be sitting on liquid stocks that can be easily sold. And that's a problem for Sri Lanka. There are not many companies that have very liquid stocks.
Okay. Another question. Any suggested improvements for our Colombo stock exchange?
Get these government companies
Get
listed.
the companies
That's
listed.
number one. Number two is to expand the liquidity by bringing in more local investors into the market and by encouraging the pension funds to put more into equities. A lot of these pension funds, not only in Sri Lanka, but in other parts of the world, believe that, you've got to be safe and go into fixed income. That's not safe. From a long-term perspective, fixed income is not as good as equities for growth.
So we talked about fixed income. I just wanted to go to a conversation we had yesterday about my pet subject, which is real estate as well. We talked about the mortgage market and how you need to grow it and what you have to do. Could you share some insights on how this plays out in other countries in the world? I guess the context for this is that we have very, very dismal mortgage penetration. If you look at a company like John Keel's, maybe 7% of our customers, 7 to 10%, would take housing mortgages, which is dismally low compared to regional peers. How does it work in other countries, and what's maybe holding us back?
Well, if you want to look at probably the most vibrant real estate market in the world, and that is the U.S. and Hong Kong, countries like that, the key, of course, as you mentioned, is mortgages, because people usually don't have the capital to fork out cash for an apartment or a house, and they need a mortgage. And that means the banks have to supply a much greater degree of mortgage money. But I notice here that the banks are limited in their ability to do that. And by the way, it was the case in the U.S. as well. But then the government said, okay, we will help out the banks by forming an organization that will buy these mortgages from the banks. So in other words, you had Fannie Mae and Freddie Mac, these two big organizations. Very interesting structures because they were formed by the U.S. government, but they were privately listed on the stock exchange. You could buy shares in these companies, and they were owned by private investors. And unfortunately, many people thought, well, these are government companies, then they'll never go bankrupt or get into trouble. But they did get into trouble. They didn't go bankrupt. They were finally bailed out.
But why did they get in trouble, and how does a country like Sri Lanka avoid that? kind of
Well,
pitfall?
what happened is that the real estate market in the U.S. Started to sink into selling mortgages to people who did not deserve to have a mortgage. In other words, people who were incapable of ever paying
So it's
back.
an origination problem.
The origination was very, very bad. I mean, there was a joke of in one real estate broker was approached by a dog, and the dog said, "I want a mortgage." He said, "Just put your paw here and you can get the mortgage." I mean, that kind of thing. So you had people who were totally unqualified. And then you then had the problem where the bankers, and here's, by the way, where the regulators fell down, they started to structuring these mortgages into packages and selling them on to investors, but structuring them in such a way that you had the low caliber mortgages mixed with the high caliber, and the rating agencies were giving a high rating to these structured debt obligations. Then, to make matters worse, you had AIA and other insurance companies insuring these mortgages, these packages of mortgages, and doubly insuring them. So you had a pyramid of potential losses. So what was the error? The error was, of course, the regulator fell down on the job. They didn't look at what these were and didn't just crack down on these structures. But the reality is that for a long time, it was very successful. A lot of people got their homes.
Yeah.
They got mortgages.
Well, let's hope we see some reforms.
So, I
here in
mean,
that
the lesson for Sri Lanka is, first of all, don't allow these structured products.
Yes, they don't,
Don't
yeah.
allow that. And establish a similar kind of organization that purchases mortgages and is listed and can issue its own bonds and shares to finance the purchase of these mortgages. And by the way, Fannie Mae and Freddie Mac were quite profitable for quite a long time before this
Before
whole
the crash.
thing happened. And they're back in business again.
Okay. So you mentioned in your earlier remarks that, of course, you've bought with us. You've invested in Sri Lanka. You've invested in real estate across the region, I'm sure. How do we compare to the region? And what's your kind of view on real estate market in general in Colombo or in Sri Lanka?
Well, right now you're involved in a boom, so to speak, and the construction that you're seeing here in the waterfront has been quite remarkable, and the amount of money coming in is quite good. So it's quite impressive when you think about it. I mean, you're headed in the right direction. It's quite good.
So there's lots of debate. I get lots of questions in my line of work saying, look, there's 4,000 apartments on the market. Is it too much? What's your view on that?
You must remember the bulk of the population in Sri Lanka, from what I understand, are living in the countryside. They're not living in cities.
Actually, less than 10% live in
Less than-
condominium housing.
yeah,
It's
So,
an
I mean,
anomaly.
if you look at the trends globally, people are moving to cities. That's the reality for a number of reasons. But most important reason is jobs. There are more and more jobs being created in the cities. And you saw the same development in the US, in Europe, all over the world. You've seen the same development because people see the opportunity to make more money in a concentrated urban area. And also agriculture becomes more efficient with larger plots. So you've got to move towards a more reorganized agricultural sector. This kind of trend is global in nature. It's happening everywhere, and it is happening here in Sri Lanka. So every apartment built here will be occupied. There's no question about that.
Yes. No, I mean,
It's a matter of price, at the end of the day.
I think, and price is again linked to availability of finance. It's quite an interesting. I think to me, it's a very interesting transformation that we're on the cusp of. As we invest, hopefully, in mass transit, you have this massive change. As you show this kind of before and after, I think your 25 years after in Sri Lanka is going to be pretty interesting to see where that goes. Let's look at another question from the audience. What is your view on the recent tax cuts? So the government has announced a slew of tax cuts and a stimulus package. What is your view on that? What are the risks associated with that? And how can government potentially manage those risks?
I think they should cut the taxes more. I'm not necessarily a fan of Mr. Laffer, but I do believe that the Laffer curve does have some relevance. But at the end of the day, you need growth. The only way government is going to be able to raise more taxes is if the economy grows. And you can't grow an economy if people are burdened with high taxes at the beginning to get started. Now, as the economy grows, the tax income will increase with reasonably low taxes. And so it's very important to do two things at this stage, and that is to lower taxes, make them easier to pay, make them simple, reduce regulation so it's easier for people to get started in business, and finally, and most importantly, get a situation where people are making it easy to invest, to bring money in to the country, and not only foreign investors, but domestic investors.
Okay. I need more questions, actually. What's your view about rate outlook? Rate outlook for the government bonds? Do you think we should have CBSL rates
going down?
We should go down?
Yeah.
Going further?
Yeah. You've got to reduce interest rates dramatically. You see, you have to look at the global situation. Interest rates globally are going down and are low already in many places, negative rates in Europe. So rates here should go down. So a lot of people worry, if we lower rates, the currency is going to get crushed. No, currency is based on confidence, not on interest rates. It may look like that, but the reality is that if there's confidence, people will have confidence in the currency. And you can see that with the U.S. U.S. is one of the most heavily indebted countries in the world, yet the currency is very strong.
In terms of positioning ourselves vis-a-vis kind of the global powers, if you will, China, India, US, how do you think we should kind of play that? I mean, we've got competing interests in Sri Lanka.
Play one against the other. You're in a very good position. You can invite the Chinese in, then the Indians get angry. They say, no, you shouldn't do that. Okay, what are you going to do for us? Then the Americans come, hey, we don't like the Chinese. Come in, well, what are you going to do for us? This is the way to do it.
Right.
You got to play one against the other and keep your independence.
Another question related to this, with China's interest in Sri Lanka and other two superpowers also competing for our land, what do you see the future for our property sector? So again, just building on the earlier one, but looking at foreign interest in real estate, the domestic play is fairly clear. There's so much pent-up demand that you need to fill, but overseas interest in Sri Lankan property market, how do we stack up? How should we play it?
You know, this is one of the things that people misunderstand. And the U.S., I remember, I don't know if you remember back when Japan was the big growing country and they were buying everything in America. In fact, they said that the property in Tokyo that covered the Imperial Palace was worth as much as all of California. And they were going to the U.S., they're buying the Empire State Building, Rockefeller Center. And I remember my brother, who lives in Long Island, New York, said, hey, the Japanese are buying all this stuff. It's very bad. We got to watch it. I asked him, what are the Japanese going to do with this property? Put it on their backs and carry it back to Japan? You know, you let them buy this property. They're going to have to comply with the rules and regulations of your country. So I think you ought to allow the Chinese to come and buy what they want. Let the Indians come and buy what they want. They'll have to pay taxes. They'll have to obey the rules and regulations of the country. And this is one thing you've got to be really open-minded about. You know, you have to allow people to come and invest. Because at the end of the day, as long as you have a strong sense of nationalism, love of the country, no foreign country will be able to take over. There's no question about that. And particularly if you have multiple countries coming in, because the different forces will balance themselves out.
If you had a 30-year view and invested in 3 emerging markets, Frontier included, which ones would they be and why?
Frontier markets?
Frontier included, in Frontier and emerging.
Well, I mean, if you look at the long-term growth, the real rapid growth is going to be in Africa. Even now, if you look at growth statistics for countries around the world, some of the fastest growing countries are in Africa because they're starting from a very, very low base. So I would say you'd have to pick a number of countries in Africa.
Not Sri Lanka, right?
Sri Lanka has the potential. I mentioned, you know, you could be growing at 8%. So Sri Lanka would be up there. Vietnam would be up there. But if you really want to look at long-term growth now, you probably have to move to Africa as well.
Okay. What is your view on free trade deals? Should Sri Lanka enter into more free trade agreements or be more?
See, a lot of people talk about free trade, and the World Trade Organization tries to promote free trade, but trade is never free. And the reason for that is that you have the non-tariff barriers. So, for example, let's say you and I make a free trade agreement. I say, I'm going to ship anything I want to your country, and you can ship anything to my country. Then you're shipping shoes to my country, and my shoe manufacturers start complaining. So what I do is I instruct the customs officer to say, don't allow any shoes with rubber soles coming from your country. And you complain, you say, hey, it's supposed to be free trade. I say, look, that's a local regulation. I can't help that. Right. So all of these barriers build up. And so in the end of the day, you're really not having free trade. And this is the problem with the conflict between the U.S. and China. Because being a unified state with really tight control, the Chinese are able to impose lots of non-tariff barriers that the Americans are not able to do. Because you have these multiple interest groups in America who you want to import this stuff, right, because it's cheaper. Right. So this is the real, one of the reasons why Trump is against these multilateral agreements, because it puts you in a straitjacket and a disadvantage. So, and that's the reason why I think going forward more and more, you're going to have bilateral agreements rather than multilateral.
Okay, another question, I think building on...
By the way, interesting how India pulled out of the recent agreement between ASEAN nations and China. Notice that? Well, that was the reason, because they realized that by signing this, they would be subject to very harsh imports from China of cheap goods, which they couldn't get out of, you know.
What should a country like Sri Lanka do to escape the middle income trap?
I don't really know what the middle income trap is, frankly. They sometimes people characterize it as when people get into middle income, they don't move further. I don't think that's true. I think there's no reason why people in the middle income bracket cannot, continue to grow at a good pace. I think the problem is the measurement of progress is not very accurate. And you can see that in inflation statistics. I'm coming out with another book in which I state that there is no inflation, because the inflation numbers don't accurately reflect what is really happening on the ground.
So you think central banks have messed up the world, basically?
Yeah, the problem with central banks is that everybody looks at them and said, oh, you got to do this to interest rates, do that to interest rates. And they say, wait a minute, our responsibility is to protect the currency, which is a never-ending game, because as I mentioned, currencies is based on confidence, not on interest rates necessarily. And then they say, well, the next thing we've got to protect it is inflation. But inflation is a very bad measure. It's poorly measured, because you have a basket of products that changes. You know, the basket of products are changing, so you're comparing apples with oranges from one period to the next. And it doesn't take into account the differences in quality and service. I mean, this has been a sea change in things like automobiles, let's say. The quality of an automobile today compared to 20 years ago, 30 years ago, is completely different. So the measurement is not very good.
Moving back to specific sectors, a question. If you were to invest today in Sri Lanka, can you name 3 sectors you would put your money on? And maybe we can get into why.
One would be property, obviously. The other one would be perhaps the financial area, because there's a lot of fintech innovations that could be applied to that area, and it's already been done, but there's more to be done. And the other area would be, of course, tourism.
Just talking on fintech, though, and tech in general, what does a country like Sri Lanka need to do to really have this industry take off? It is one of our faster growing industries, for sure, but it's still nascent. How do you make it take off? And what have you seen in the region?
Well, it has a lot to do with the regulation. If you can free up the regulation regarding money transfers and all of these other services, then you can have real innovation. You know, the interesting thing about Kenya with M-Pesa, a revolutionary system for transferring money, the reason why they were able to succeed because there was no regulation. The government didn't have any regulation covering money transfers, and so Safaricom was able to introduce this system, was revolutionary, and the banks were not involved at all.
You know, one of the things that gets talked about a little bit in Sri Lanka is to really attract the kind of talent we need. We should start loosening up immigration policy and allow talent to come in. What's your view on that? It's a very controversial kind of topic in Sri Lanka, actually.
Yeah, again, of course, you know, you've got to have some control of people coming in and out of the country, no question about that. But what you have to do is say, okay, we want to attract people, good people, and you have qualifications. In other words, you say, look, anybody with a degree from MIT can freely come in. By the way, MIT in my case means made in Taiwan, but that's another question. But in other words, set certain standards of quality of what you want, the kinds of people you want, and then say, come on, anybody who has those qualifications are free to come in. I think that's the way to do it.
But I guess managing the politics of it is maybe the hardest part of that equation.
Of course, that's always the case. At the end of the day, it's about politics. Yeah.
Okay, a banking question. Do you think central banks should be abolished and replaced by currency boards similar to Singapore and Hong Kong?
I would say probably yes. It probably makes sense, to do that. I think central banks are in a very bad position. I have pity on these central banks to a great extent. People are expecting them to grow the economy, to control inflation, and let's face it, they cannot do this. It's impossible for them to do it. And the sad part of it is that they get misled and they get blamed for what they didn't do, basically.
Your views on fueling Sri Lankan entrepreneurship. What could Sri Lanka do, or what could our government do to stimulate greater entrepreneurship in this economy?
The key is make it easy for people to form businesses. So why is a country like Hong Kong so entrepreneurial and so dynamic? Reason is I can go to the company registry in Hong Kong and register a company in 1 or 2 days. That's the bottom line. It's so easy to start a business. And particularly for young people who don't have the money, you've got to make it easy for them to start a business.
I think one of the interesting challenges in Sri Lanka, starting is relatively easy. Closing is really, really hard. And culturally, failure is one of those things we don't like. Can you speak to that? I know, 9 out of 10 new ventures fail. In the US, for example, where I've lived quite a bit of time as well, failure is not necessarily a bad thing. It's a question of whether you dust off and keep going. What's your view on how governments should start to deal with failure?
Yeah, I don't think governments can do much about that. I think it's a social attitude that has to change. And it means you have to show the young people in schools how some of the greatest entrepreneurs in the world were failures when they started. Basically, they failed in a number of things and finally succeeded after lots of hard work. So I think it's a matter of educating people to realize that, look, don't be ashamed of failure, because some of the most successful people in the world actually failed.
Okay. I think we're running short of time. Just to wrap up very quickly, could you give us a few parting thoughts from your perspective, again, on Sri Lanka in general, the outlook for Sri Lanka, where you think maybe our audience here should start to look at for opportunity, and what kind of time horizons should we be looking at for kind of change?
Well, I think everybody now in Sri Lanka should think that we're in a new beginning, so to speak. In other words, we're turning another page in the growth picture for the country. And you've got to be optimistic, really. You've got to think positively and really make plans for growth. At the end of the day, that's really the key. Think about growth and try to influence the government to move in that direction. In other words, free up the process, make it easier to move forward, and encourage more investment.
Okay. And invest in tourism, tech, and real estate, I suppose.
Exactly.
Thank you very much,
Thank you.
Dr. Mark Mobius, and let's give him a round of applause.